This week, Ben and I are going to talk about some adjustments to South American soybean production estimates, along with general economic factors and soybean crush for the month of December. Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how's it going?
I'm doing great. How are you today, Will?
Doing pretty well. It's inauguration day, also National Title Monday. For those of you who are watching this probably later in the week, we're recording on the day of the national title. Ben and I both have some sort of tie to Ohio State, so I got the Ohio State hat on today. So gotta represent.
Yeah, I'm looking forward to the game. I always enjoy the national championship game, and this will be a lot of fun.
Yeah, yeah, and we have a pair of Midwestern teams, in the title this year. So
Sure.
kind of cool. So maybe viewers and listeners might be partial to one side or the other of that. But anyway, Ben, giving a quick rundown on the week's change in prices. We saw some losses kind of midweek last week, and then on Friday, kind of closing out the week, we saw kind of a return, some increases there that offset some of those losses. Looking at March corn for 2025 this year, up 14 cents in the week at 484. December corn up 6 cents at 456. March soybeans up 9 cents at $10.34. November soybeans up 4 cents at 10.27. Looking at soybean oil on a cents per pound basis for March, just about flat at 45.69. Soybean meal for the short ton for March, down $1.10 at 297.20. Looking at that March wheat contract up 8 cents at 538. March cotton was up 0.59 cents at 67.60. And then that West Texas Intermediate crude oil contract for March up 77 cents a barrel at 76.52. So really upward movement heading into the extended holiday weekend break. To close out last week, they kind of offset some of the losses we saw midweek.
Yeah, absolutely. It was kind of an interesting week that's maybe hiding a little bit of the volatility that we saw last week in those weekly changes. We started off last week kind of continuing to build on some of the bullish fundamentals that we saw coming out of the USDA report changes. That held for a couple of days. Then we saw some sell off, which is expected after kind of a sharp rally like what we saw. But then on the back end of the week, South American weather started to come into play. We saw some reports of increased rainfall, especially for some of the drier areas in southern Brazil and Argentina, that created a big drop in prices on Thursday. But then we rallied again on Friday. So I'm curious to see where this coming week's markets start out because we have seen some rain in Brazil. I'm sure, just like always, there's going to be some areas that met expectations and some areas where the rainfall disappointed and it remains relatively dry. So those are always fun observations to make in terms of how did rainfall event meet or exceed or fall short of
Yeah.
expectations.
Well, and Ben, I think what was kind of interesting to me watching the last week, and again, this is just a very short-term snapshot, but we saw soybeans trade on that nearby contract, within maybe a 30-cent range or so. I'll have to go back and get an exact number, but I think it floored out on the week at around 10.15, 10.19, 10.20, somewhere in there. And for soybeans, when we'd been sitting below $10, coming out of December into January, I think maybe there could be a little bit of a new floor established for the moment, at least at that 10-15-ish number. Just kind of watching the movement on the week. So I don't know what your thoughts are there, but maybe a bit of a new floor established on the bean side.
Well, it seems like there is a little bit of resistance at that mark. People keep asking me if I think beans can go a little bit higher, and I think my response to every single one of those questions, or that question when it's been asked, has been it certainly is possible. However, I didn't think we'd get beans as high as where we are now. There's a lot of beans on the global market. And certainly, yes, the domestic picture is a little tighter than where it was, but
Yeah.
there's just a lot of beans out there, and I think that creates a lot of headwinds for soybean markets moving forward.
Well, and talking about some of that headwind looking further out, we had a CONAB adjustments. That's Brazil's equivalent of USDA looking at soybean production For the 2025 year, they raised it a little bit, looking at a higher planted area and expectations on improved yield numbers. So that's one headwind, kind of limiting maybe that farther out potential increase. But on the flip side, we did see strong soybean crush numbers for December out of the NOPA report, the National Oilseed Processors Association. So, Ben, how do a couple of factors like that kind of balance each other on where the market is trying to move, or maybe just kind of in a lock?
Well, that's a great question. I'll simply respond and say that CONAB's numbers oftentimes do differ from USDA. It's not one agency's right and one agency's wrong. I know we like to pick the one that matches our personal bias. They both have different ways of calculating, or estimating area and yields and sometimes even marketing year differences as well. And so, that's a part of this. I think what I tend to look at is, based on where their estimate is, are they increasing or decreasing it from their prior estimate, right? That's, I think, a kind of a nice measuring stick. And we saw the CONAB agency, or the Brazilian agency, increase their production estimate. But to me, the more interesting number was actually the export number. We saw them increase their soybean export number to 105.5 million metric tons. That's up 7 million metric tons from where they exported last year. And so, again, it's not just that they're producing a lot, but they're actually putting a lot of soybeans on the global market that the U.S. is going to have to compete with.
Mm.
And then, so that's the public sector, right? And then a lot of people also tend to look at the private sector. We saw a lot of private firm estimates come out about the size of South American production. Ag Resource, they increased their Brazilian soybean estimate
Yeah.
up 2 million metric tons to 172 million metric tons. AgriConsult increased their estimate of the South American production just slightly, 200,000 metric tons. And so, we see this trend kind of continuing to increase. USDA left their estimate alone at 169 million metric tons in January. But I think that's, again, it's just some of the headwinds that we're seeing in terms of, not only is Brazil going to produce a lot of soybeans, but they also have a lot of soybeans they could export on the global market.
Yeah, well, and looking at the relationship on the global market, a couple of things are shifting, in the U.S. picture, both perception-wise and just physically. It being inauguration day, new administration coming in, we're gonna have to wait and see a little bit on the implications on what that could mean for trade. But something that is a little bit more physical that we can watch, the CPI and PPI, the Consumer Price Index, Producer Price Index, kind of both inflationary measures. They're both within expectations, but both up just a little bit month over month. How much of an impact does that have on maybe watching these ag trade estimates moving forward?
Yeah, that's a very good question. So a couple of things kind of intertwined here, and I know sometimes it's hard to kind of pull it all together because there's 50 different levers that are all moving at the same time that can create kind of offsetting impacts sometimes. For a lot in the agriculture industry, these measures of inflation directly impact most farmers through the expectations of interest rates. That's kind of the big part here, and I don't think anything in this data signals that the Fed's going to move forward with interest rate cuts here, that maybe their next couple of meetings, certainly not their meeting in January. And so I think, we've maybe found a floor, I think, for the time being in interest rates moving forward. And so that's one part of that. The second way that this plays out is, if the Federal Reserve is keeping interest rates flat, then it becomes, how does the U.S. interest rates compare to other economies around the world, right? If we see the European Central Bank or the Japanese Central Bank continue to lower interest rates, then that moves more dollars to different places around the world. It impacts the investment rates, the long-term end of the curve, and can have impacts in terms of the U.S. dollar, right? And we've seen that here over the last couple of weeks and probably the last month, with the U.S. dollar reaching some very strong multi-year highs. That creates some negative pressure or bearish pressure on major export markets in the commodity space. And so I apologize that there was, and like I said, there's 50 different levers all moving at the same time. So you'll hear economists say all else equal, but basically that's what it's
But it's
saying.
almost never all else equal.
Yeah, it's never
Exactly. You
all
know?
else equal. There's always things moving. There's always
Yeah.
product and things moving.
Yeah.
Prime example would be, we have no idea what the trade picture is going to look like in the short term, right?
Yeah.
Like I sit here and say I can make a case that it's bearish to U.S. commodities, and I can make a case that it's bullish to U.S. commodities. The bottom line is I have no idea what happens and how that impacts markets. So that adds some uncertainty. Well, you could have something happen in the policy space that fully outweighs
Just flips
what
it
the
on its head.
exchange,
Yeah.
yeah, what the exchange rate market is doing in terms of international demand for
Yeah.
U.S. products. So long story short, prices continue to increase. that's the sort of this is the producer price and consumer price index both suggest
Yeah.
prices continue to increase.
Well, it's kind of neat too, looking at the interplay there, because I don't know if a lot of people realize it, but Japan's currency is the third most traded currency on the global market. So even just watching that, as opposed to the euro and the U.S. dollar, is very important for for these implications. But that's kind of getting in the weeds here. Ben, looking forward into the rest of the shortened trading week coming off the holiday, what should farmers and ranchers be paying attention to?
Yeah, so everything's delayed a day this coming week just because of the holiday here on Monday. Cotton Jennings come out on Wednesday. That's kind of something we don't look at a whole bunch, but it's nice to get that update once a month and see where we're at on that. Energy report on Thursday. Friday, we do get an updated cattle on feed number for the 1st of January. So for our livestock friends, that's something they'll be talking about in the livestock market report. And then next Monday, we'll have both the ag export inspections and then the CFTC report come out next week.
All right. Well, Ben, it's always a pleasure having your knowledge and information here on the program. Viewers and listeners, if you'd like to learn more about us and what we do, or our sister program, the new and improved weekly livestock commodity market update, you can check us out at brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.